Yo. Welcome back to the channel. Yeah, let's do a market update, look at AMC, what progress has been done there. Overall, looking at SPY here, we're still watching the same exact thing that we were watching yesterday. You're approaching this red resistance, and you're in this kind of bullish channel here. The resistance 707 level has been really key for SPY and really market wide. 707 has been a big deal, and you see it correlates here with this red line, which has acted as resistance. This is the macro bear trend for SPY, if you will. So this is really a key level to be watching. I don't think that you get turned around at like this 428, 430 for very long. I think you're going to just retest the top of this golden pocket here in this way, right? And then kind of let this carry you up. And then 707 is going to be the big test. So 432.77, watch that. If you break above here, and then you can establish it as support, even if you break back down and you're retesting in this way. So perhaps it would look something like this, where you come here and then potentially break above there and then establish it as support. This macro bear trend is over, and you're going to be looking for the next level to be watching. Potentially, you could get turned around at 450 or so, and then that would establish perhaps a new bear trend that might look something like this. And then from there, you're going to be looking for the new support. But right now, I mean, I'd say overall that SPY looks good. I know a lot of people are saying, "Oh, look at the volume," but you know, even though volume is decreasing here, it's not really going to, I mean, bulls are in control of volume. It's not really going to matter until you break this bear trend. Once you break the bear trend, you certainly want to see bulls come in with more dominant volume, right? You're going to want to see more volume, and then that's where the rally really matters. But if you've been sitting here looking at this and going, oh, the volume is decreasing as the price goes up, on SPY, and I mean, this isn't even talking about the broader market, but if you've been making that argument, you've pretty much missed out on a 20% move on SPY. So that's not really I mean, at a certain point it matters, and when it really matters is when you face resistance. So just to give you an example of what I'm talking about here, whenever SPY faced this resistance, you saw the volume come in, right? Volume increased, boom, to blast you through that resistance. And that's why you've gotten to where you are, is that because when the volume had to come in, it has come in up to this point. Generally speaking, yes, it is bearish, but when you get to this macro trend, that's where you're going to want to see competing volume with this really high volume here back on June 13th on this press down. All right, so that's SPY. We can look at Bitcoin briefly. Bitcoin has had a rough day. But you still are in range of pretty much testing this liquidity zone that you had. So you're retesting this $24,000 liquidity zone pretty much. It's still a valid ascending triangle in my opinion. You're looking at lower time frames here, but you're retesting. Now, if you fail 24,000, you'll probably come back down here and test this low 23,000. On Twitter, I mean, I announced when I went long, which was around $19,000, and I'm willing to short a breakdown here. And then have a tight stop loss, because if you break back above 24,000, that could be your establishment of rally. But overall, nothing really crazy has happened with Bitcoin. It's just that you're going to want to watch and make sure that you see here, this is a 786 retracement. And that's why it feels particularly painful for bulls. But still, you're within Fibonacci retracement. You do have a look here where you could say that, and this is a pre-drawn like sketch. This isn't necessarily how I feel, but it's certainly something that could happen. But you do have a look here. If you go out to the daily time frame and you just look at the closes, there is a case to be made that you have a rising wedge developing here off of these closes, as well as these closes. And closes are more significant than wicks, specifically on higher time frames. And so what that could mean is maybe you have continuation up here, and then you break down here. If you don't hold support here, then this rising wedge gets pretty bearish, and then you can get pushed down to like $21,500, $22,000, this liquidity zone before you see it press up. So that's basically where I'm at with Bitcoin. I know it looks like a lot of lines now, but hopefully you kept up there. And then this is AMC. AMC actually looked really strong today. I think that you had this big press down in the morning. No big surprises there. I think that was definitely something that I mean, most people that I watch or that I'm aware of that are doing technical analysis on this thing were pretty much expecting that. And so you got to press down to this 707 level, which was $22.64, but you found support here. And volume isn't as strong as you would want it to be, but again, it doesn't really matter until you are reaching like big resistance points. And you can measure that locally, right? So you have, I mean, this looks pretty good here, guys. Like, you have a big press up here as you're breaking through this trend. Perhaps that 707 retracement is a completion. And if you look at it, if you just look at it, ooh, that's throwback. I bet you haven't heard that in a while. I drew like these downtrends basically based on all of the macro rejection spots, right? And if you look at it, let me make all these a little bit less visible so you know which one I'm looking at because they're really close to each other. You kind of have completed a retest off of this downtrend that would be established by the high of 47.19 on November 8th. That was when I was like mid video. I think I shifted bearish and I was like, oh no, I thought I was bullish. But you have you found support here. And yeah, I mean, overall, guys, like this looks like a pretty strong move, honestly. And it looks like bears are really losing steam with these big wicks at the bottom here. I wouldn't be surprised if you do press down one more time, maybe touch this trend line. But I think that it's possible that that could be the end of the downside here. It does look distribution type in nature, but you have rising volume on the peak. And I mean, the volume's pretty low on this rejection here for this double top. It's not like bears came in with a ton of conviction and rejected you. I can give you an example of what I mean there. Let me try and think of one. I can look at lower time frames and show you an example of SPY, perhaps. But a lot of times whenever you see something that is going to end up being distribution, let me do it on Bitcoin. Those gaps are kind of weird because it changes the volume. So, sorry. Let's see. So a lot of times when you see something that's going to end up being a completed distribution, what you see is demand exhaustion that occurs. Oh my goodness, dude, this is a nightmare. Sorry, guys. That the reason I don't want to use that is because it's Bitstamp, which is the better macro chart, but the volume on it is all messed up because people don't really trade on Bitstamp that often. I mean, perhaps I can just show you here. So yeah, so look, this is a macro look. So with Bitcoin, you see the volume is increasing here, and then you have this big sell-off. See this big volume candle that came in as it was selling off? That's a good sign. Well, that looks like a sell climax. This is a better example. Sorry. So it is a good sign, though, that you're going into distribution, but you get sent back up here, and you can see that the volume isn't really coming in here until you get selling candles, right? You get a sell-off here. This is a great signal that institutions have started to offload. They'll buy back here, right, create some demand here, and then push up. But you see that the bullish volume doesn't really come back in. Boom, boom, and then look, this big sell, this is where you could have known that Bitcoin's top was most likely in. After all of this weak volume at these highs, you have these big sell candles come in, and then obviously this was a sell climax for an accumulation here. But as you can see, you've continued to distribute, and you see the same thing, the same behavior occur here. So you have this rally, relatively weak. Bulls come in here, and then bears come in and slap bulls down, and you see the increasing volume on those red candles. That's a good sign that you're going to see continuation to the bearish downside. And then, I mean, you saw even more continuation with these red candles here, which led to your lower lows here. So yeah, so that's pretty much that's just like an example, I guess, of how to look at volume candles relative to the trading range that they're in. And I'd say that overall, and it's been like this for a while. And look, I mean, part of like investing and especially long-term swing trading is that you're gonna have to be patient in a lot of these plays. I took a look at Overstock because somebody said, somebody on Twitter was like, "Hey, how can we use Like, can you look at Overstock or I think Volkswagen and apply technical analysis to their squeezes? And I was able to draw up this chart here. So this is a macro look, right? And what you have here is accumulation. And the reason that, especially at the end, you can tell that there's going to be a big push to the upside is that every time that you have a rally, even above this trading range, you can see that volume continued to make new highs as price was pushing up. So there is demand up here. Institutions create a big sell-off, right? And they continue to create sell-offs so that they can get their lower price. You break the bottom of this all-time trading range and volume disappears completely, right? That's a spring, right? So this is an all-time low. And I'm not necessarily saying that you are requiring that sort of thing on AMC or anything like that, but I'm just saying, I'm using this as an example. This chart started in 2003. And you see this squeeze come upward. This is just basic analysis based on volume from a Wyckoff perspective. I will say that overall, this chart is relatively interesting because it looks like it's, it's coming back for a backup LPS back into the all-time trading range. But again, this doesn't mean that you're not gonna like have a long-term kind of accumulation look that occurs here, and it could take years before you see another push up for Overstock. But I would say overall, as long as you maintain this like $22 level for any stance of time, you might have a spring below or something. It's actually a pretty good sign that you might see more upside in the future for Overstock. If you lose $22 and you get pushed down with a lot of bearish volume, then I'd say the opposite would probably be true, and you get sent back down. And then maybe you would have to adjust this trading range at that point and say that perhaps this was the top of the accumulation range, and this was actually just like a LPS, and you were getting pushed back down until, well, actually this is a local distribution within that accumulation, and it's possible that you get sent down here again, and then you could have another spring, something like that could occur. So, yeah, that's pretty much it. I just wanted to share that with you guys because I thought it was interesting. Maybe I'll make my own a separate video for this Overstock chart because I really do think it's an interesting one to look at. And just shows you that, technicals can be indicative of squeezes, right? And I'm not saying that, and also I use the Fibonacci to predict the top here, right? So if you pulled the Fibonacci extension from the bottom here to the top here, all the way back down to this local bottom in December 2011, the golden pocket on this extension actually signals the top. Oh my goodness, I have the paintbrush still up, and it's messing me up. You can see here, you wick. I think your wick goes just above it there, and then you get turned around. And then you can see that these Fibonacci ranges act as support and resistance on your way down. So that's the video, guys. Again, I know this one was kind of jumping around as well, like last time. I'm going to have to start scripting these videos so that I'm a little bit more structured. But hopefully you enjoyed it. If you did, make sure you slap a like on the video. It helps support the channel. Thank you for watching until the end. Leave a comment on your thoughts. And until next time, peace.